I think we can all agree that last year was somewhat of a roller coaster for the
But
markets.
it was like a very surprising event that it happened towards the end of the year. It's quite evident that the inflation is not gone.
Which market event really surprised you or like affected your trades in a way you didn't really anticipate?
You would expect that the dollar would have declined a lot, but to the contrary. So the extent of this move, Bitcoin taking out 100,000 level as well, that was like a big surprise to me.
This caused a lot of problems and challenges within this industry.
Something is not right in the bond markets in that sense that over the last few weeks, we have seen government bonds dropping across the globe. So
It can get, quite tricky. Like you never know what to anticipate, what to expect whatsoever.
the more taxes you have, the less incentives the companies have and the resources they have to.
So do you think like Trump is here to harm the markets while trying to fix whatever situation's been going on in the US?
And I don't know how they will come out of this.
Hi everyone and Happy New Year. 2025 looks promising on all fronts, especially for the markets. That's why we decided to kick off the year with a bang by interviewing the Trading Blitz founder Illimar Mattus to get exclusive insights from him on the biggest financial events of 2024 and what they mean for this year. And not only this, we will also be focusing on prop trading and what makes it such a game changer for traders nowadays. So now, without further ado, let's get started. Hey Illimar, and thanks for taking the time to chat with us today. We know how busy the post-holiday season can get, so we promise to keep this interview very short and sweet.
Hi, Celine. It's a really pleasure to talk to you. And yeah, I feel you are close here, even though you are like thousands miles away.
Yep. Distance knows nothing. So I'm gonna start with my very first question. So I think we can all agree that last year was somewhat of a roller coaster for the markets, from the Fed's rate cuts to the Bitcoin halving and then the US elections later that year. A lot of asset classes witnessed significant volatility. So, which leads me to my question: which market event do you think had the biggest impact on both markets and traders?
I think probably the biggest impact last year was the re-election of Trump. In that sense, that obviously everybody knew that he's going to run again for the presidency. There were some like court cases, whereas a lot of people thought that he's not going to actually make it. And then the like original polls were also like showing that he's not going to win, but it was like a very surprising event that it happened, and from there on, all risk assets like stocks, cryptocurrencies, US dollar as well, like everybody just gold as well, everything just got really really crazy. So I think last year that was probably the biggest event that kind of affected the markets. And I would also say that what's the second kind of surprise on the markets last year as well, which has actually like come forward to this year, is the re-emergence of inflation across the board. So in emerging markets, also in developed markets, that somewhat people were kind of thinking that the inflation problem is already resolved. The Federal Reserve and some other central banks also started lowering the rates. And towards the second half of the year, towards the end of the year, it's quite evident that the inflation is not gone, and hence you start seeing like a lot of movements on the markets as well. With gold, with the currencies, there's a big issue with yields now on the government bonds. So it's like super volatile, super unpredictable actually what we are seeing on the markets the last few months actually.
Yeah, actually, very good point. 2024 was super volatile. I think that's like everyone knows that. But like, if you were to describe one market event that surprised you personally as a trader, like because you're not only a businessman but you're only a trader. So, which market event really surprised you or like affected your trades in a way you didn't really anticipate?
I think I'd bring out again two instances. So one instance was the bullishness of US dollar, because as we all know, last year the US government and the Biden administration especially, they were spending a lot of money, in part because I think they wanted to get Kamala elected, and hence they spend a lot of money to give the economy a boost, and then be able to show that Democrats are really like running it well. And so the surprise was that after all of this money printing and excessive printing, I would even say, whereas you would expect that the dollar would have declined a lot, but to the contrary, so dollar was rallying across the board towards the end of last year, and this kind of strength has come forward also to 2025. And related as well, to Trump, was the general this crazy moves in the crypto market. So right from the moment where they say that Trump won the elections, so cryptos, bitcoins, Ethereum, all the cryptos, really alts as well, they've gone crazy to the levels which we did not see before. And again, it was like a surprise. The extent of the move was like a big surprise to me. I kind of expected that, because Trump was pro this new technologies, cryptos in general, that the markets will get like a boost. But the extent of this move, Bitcoin taking out 100,000 level as well, that was like a big surprise to me.
Yeah, speaking of which, though I think like a lot of people in the markets, both traders or investors, were surprised about Bitcoin hitting the big 100K, but it was unable to sustain its momentum. Do you think in the year ahead, like in 2025, can we see Bitcoin reaching like the famous 200K, or at this point numbers don't really matter anymore because like once this barrier has been breached, like anything above 100K is not that significant anymore?
So we are today 10th of January. So Bitcoin is trading below 100,000. We're 95,000 right now, and I think, uh, and we are 2 weeks from the inauguration of Trump. So I think cryptos will probably go higher from here, at least like for a couple of weeks, because Trump, as we know, he's so pro crypto, so and Elon Musk as well. He's effectively a business partner.
Right.
Then I think this momentum will drive cryptos higher, and I think we'll have also this alt season, whereas the alt currencies will also go higher. How high, I don't know, but I think personally, and that's my personal opinion, that Bitcoin will probably go to the level first like 115, 120,000, and then you start seeing some decline like over the next few months. But the next 1 2 months, I expect Bitcoin to reach 115, 120,000. That's my personal kind of feeling.
I think this also can be supported by the fact that the SEC chair Gary Gensler is also going to be replaced by someone who is pro crypto. As we know, Gary Gensler is not the biggest fan, and he's caused a lot of problems and challenges within this industry. So it's interesting you say that, but I just want to remind our audience that this is just personal opinion. It hasn't anything to do with financial advice, so we're clear on that. While 2024 was obviously a big year for the markets, 2025 also feels like a pivotal year for traders. As a trader yourself, is there like any top three assets that you will be keeping an eye out on or like tracking closely? And if so, which ones? Is it like crypto? Is it stocks? Is it like a mix of everything?
I'm personally looking very carefully at the bond markets. And something is not right in the bond markets, in that sense that over the last few weeks, we have seen government bonds dropping across the globe. So we have even the Japanese government bonds, 10-year bonds, dropping a lot. So the yields on these government bonds are going higher, and these yields, I mean, some people are saying that they're going higher because in anticipation of potential tariffs that Trump will launch, that inflation will go higher. But I believe that inflation is already there. And the yields in general, when they go higher, it means also that the interest rates for the companies, for private individuals, they will go higher. And this is like uh, actually not bullish, it's quite bearish. So I think 2025 bonds, government bonds, and the yields will drive the markets and will tell us where we are headed in terms of the risk assets in general. And outside of the bond markets, what I'm personally looking very actively is actually the stock markets, and it's kind of related as well because yields are going higher. Stocks should then react, and stocks should actually start dropping. But the last few weeks, we've seen some kind of weakness in the Dow, but other stock markets are actually close to record highs. So I'm very, very closely monitoring the stock markets, primarily S&P 500, Dow, DAX as well, FTSE in the UK, and Nikkei, and just seeing that whether the higher yields and the higher interest rates will start bringing more weakness into the stock market, because that logically should be the case. And then if it does, then we should have like a pretty bearish momentum on the stock markets, at least like first half of this year. So that's the second one. And the third one, what I'm monitoring very closely is in general the crypto markets, because I'm not like a big crypto fan, but I just know that there are so many people that are into cryptos. There's so much volatility there. There's so much like conflicting also kind of thoughts whether it's going to continue going higher, or there will be a crypto crash. So I think for a trader, this market is going to be very, very interesting in 2025.
Yeah, no, crypto for sure is growing by the day with more like gaining more popularity around amongst younger traders, I would say, because as you mentioned, it's pretty volatile. But at the same time, if you were to trade the markets properly, you would like, get the most out of it in a way. And a question came to mind actually. So we have the very first Fed meeting, FOMC meeting on Jan 29th, if I'm not mistaken. And the market sentiment is that there won't be any further rate cuts starting like they won't start the year with the rate cut. Do you think that as a first meeting for the year, can it set the tone for what's coming, or it's not that important yet? Like we're not at a stage where we need to keep track of every and single move that Jerome Powell does, for example.
So I think that because of the bond markets and the yields that are so high now, and also because of some recent signals from some of the Fed board members, I don't think that they will raise in January. I don't think that they will sorry, that they will lower in January. I don't think they will lower also in Q1. I think there is even a slight risk actually that they might start raising the interest rates in the US.
Oh, and what makes you think that? Like, what's backing up this ideology, basically?
It comes primarily from the fact that the US government spending is still very high. The commodities markets, I just read an article today that there is still a lot of pricing pressure from soft commodities, from food, for example, that we put on the table. There is still a big salary pressure on the US side. The employment situation in the US is still quite strong. So I think there are like a number of reasons why the inflation is not going to go away, and while the yields are not also going to be dropping anytime soon. and the Federal Reserve is really like so they are aware of the situation, and also in the recent days there have been quite many signals from the board members of the Fed that they are monitoring, the situation. Most likely, they are not going to be so accommodative with the interest rate. So they are kind of painting the picture already that the market should not expect interest rate cuts over the short term period. So this is going to be like a very interesting topic over the next 6 months to see how it all plays out.
Yeah, for sure. And I've also been reading some articles as well on like stating that a lot of the decisions that will be made this year will be heavily affected by Trump's policies, because there's this overall sentiment that Trump, like whatever policies he's gonna, apply on the markets is gonna have a bad side to it, not necessarily positive. So do you think like Trump is here to harm the markets while trying to fix whatever situation's been going on in the US, or like not necessarily?
I think Trump has really like this difficult situation right now because on one hand he has to fix the budget deficits and the government spending issues in the U.S. And where can he get the money to fix this or how can he solve it? So one thing is that he can reduce the spending, but then reducing the government spending means that it's counter growth. So it's gonna have negative impact on the growth of the economy. The other reason is that or solution is that he can increase the income of the government, and hence he's talking about the tariffs. But the problem with tariffs is that the moment he will start implementing the tariffs, that means that the prices are going to rise on the US market. So that will bring back the inflation and momentum in inflation in a much stronger way. So to be honest, like I don't know how he's going to solve this issue because I read also some analysis like a couple of weeks ago that in terms of reducing the government spending, there's not a lot of like room that he can actually reduce because like big part of the U.S. government spending is what like it's social security, it's healthcare, and it's military. So these three components make up majority of the budget spending. So and he can't really reduce it. So it's yeah, I don't know how it will play out, but definitely it's like an area which we should monitor, and it's definitely the rhetoric of Trump is something that all the traders should pay really a lot of attention because that will impact the markets a lot.
Yeah, for sure. Like it can get, quite tricky. Like you never know what to anticipate, what to expect whatsoever. But when it comes to comparing economies, actually, because UK is off to a very rough start, like the UK
Yeah.
economy is off to a very bad start. Like we're barely 10 days in, and we've noticed major, slumps, I would say. So, do you think at some point it will pick back up, or like what's the reason behind this very weird start of the year for the UK?
So if I come back to the bond market, what I mentioned earlier, so the biggest issue on the bond market right now is actually the UK government bonds, which have dropped in the last 3 to 4 weeks. So, for example, 10-year government bond has dropped from like 96 to 90. So that's a 6% drop for one of the G7 countries' government bonds. That's a massive drop. Yesterday, the yield on UK government bonds reached 4.9 percent. So, and just to remind our traders as well that last time the UK government yields reached 4.8 was the time when actually the UK government and the Bank of England intervened on the markets. So we are at this very like critical point right now, whereas any day we could see some intervention. In terms of like your question, the issues with the UK is that I think there are budget issues. So the new budget that uh, the government presented in October, a lot of people are thinking that it's not actually reachable, these targets, because they can't cut so much spending. The revenues or increase in the government revenues is also questionable because the additional taxes that they implemented, it's actually counterproductive towards, generating growth in the economy. The more taxes you have, the less incentives the companies have and the resources they have to invest and grow the businesses. So that's one thing, and also the yields and the bond market that is kind of doubting the budget. Uh, so the higher yields means actually that the government of the UK has to now spend more money on paying interest on the government debt, and UK has more than 2 trillion pounds of government debt. So any percentage point of increase or even like a basis point increase in the government yields is going to cut into the budget like directly. So they have less money actually to spend. So it's like this like uh, unending circle that
Yeah.
and I don't know how they will come out of this.
Yeah, that's interesting you say that actually. Like it's a never ending cycle if you think of it, because one thing leads to the other and then like you have a whole, loop. And what about Japan? Like last year, Japan shocked the markets by, taking the negative interest rate to a, 0.1, if I'm not mistaken. Do you think Japan will struggle as well this year, or like, is
Okay.
it gonna pick
So
up?
uh,
Like,
so
you know,
that's really interesting topic because in January, I think it's on the 24th of January, is the interest rate announcement of Bank of Japan, and if you would ask me, then this is the single most interesting event for January that I'm personally paying attention to, because as we saw last like August, July, when they raised the rates to 0.25, then all the risk assets dropped a lot, and the Japanese, so Nikkei dropped 10% following that. And so I'm like monitoring very carefully what they are going to say and what they're going to do, because they are in a very difficult situation right now. Because dollar yen at 158 is actually close to the critical level 160, and this 160 is the level where the Minister of Finance of Japan usually tends to intervene. So if they are not going to raise the rates in January, then the dollar yen will jump above 160. And this is a problem for the Bank of Japan because this Japanese being an importing country, dollar yen above 160, even at that level, creates a lot of inflationary pressure for Japan because Japan buys most of the raw materials, energy with foreign currency. So when the Japanese currency is dropping, it means that they have to spend actually more money to buy like metals, crude oil, energy products, like pretty much anything, which creates inflationary pressures, which then means that the Bank of Japan will have to raise the rates, but they cannot raise the rates because Japan has what, like government debt to GDP ratio is like what, 220, 230%. So if they raise the rates, the government of Japan has to pay more interest, and they don't have money to pay the interest, so they have to print money to pay the. So it's like a complete mess what we are seeing in Japan, and thank God I'm not the president of the Bank of Japan. Like,
yeah, I don't think anyone would want to oversee whatever is happening there. So now, aside from central banks and the interest rates, let's talk about prop trading. I think as well, everyone can agree that prop trading has been gaining a lot of attention lately for some kind of reason. Do you think is it like a growing trend, and what's like driving this popularity of the field suddenly? Because like people are more used to regular trading, I would say, but when they hear of the term prop trading, they tend to ask themselves like, what is this? How is it related to trading? But now nowadays, it seems like it's gaining more attention.
I think why it's gaining so much attention, and why this industry and we are as well as a company are growing so fast is that it solves really a key fundamental problem that traders have. So majority of good traders who have talent, what do they lack? They lack capital, and this is really one of the topics that prop trading, not just us but in general the industry is solving, that anybody who is talented, who has experience, good track record, can get access to capital. And the other thing what prop trading is solving is that because the entry barriers are so low, then it's so easy to get access to like different markets, different like trading platforms, technologies, tools, etc. When you work with a prop firm such as ours, it's like you can trade today cryptocurrencies, tomorrow if you want you can trade commodities, futures. Hopefully very soon we will also launch physical stock. So it's like you have so many opportunities, and then if you are actually successful at what you are doing, you get access to capital, which means actually that you get also more financial benefits from your trading activities. So prop trading, in short, is 5 steps closer to becoming financially independent if you have trading talent. Simple as
Yeah,
that.
yeah, yeah. So, like in one sentence, let's say, for example, I'm someone who's not familiar with trading at all, and I want to get started somehow. If you were to explain to me what's the main difference between prop trading and just, traditional or regular trading, how would you do? How would you say, like,
Your risks are pretty much zero when you start with prop trading. So yes, you pay the challenge fees to get in and to prove uh, your experience, etc. But from that point on, you trade actually with our capital. So you provide signals to us, and effectively you yourself as a trader have no risk at all. And if you fail, for example, if you have loss making trades, then the trader himself or herself is not really paying these losses, so we have to cover these losses. To the contrary, to a traditional broker, where in fact actually to start trading you have to deposit your own money. And I think this is really like what makes prop trading so like interesting and actually valuable for traders, is that uh, your risks are limited. In fact, you don't have any risks
all right,
because
yeah.
you're trading with third party capital. That doesn't mean that as a trader you shouldn't like be kind of prudent and try to do your best, but effectively it means that you have very low entry barriers to start building your career as a trader, and to become financially independent. That's like really what it does.
Yeah. So here at the Trading Pit, we believe that 2025 is the year you finally become a prop trader. To anyone who's interested in starting, like getting started with trading, actually, do you have any like tips or advice you could give them, like for the new year? As a trader yourself as well, you've started from nowhere and like here you are. So I think a lot of, like our audience could benefit from some tips and tricks in the new
Okay,
year.
sure. So I think as we discussed earlier, that 2025 is going to be quite volatile year. Volatility is good also for traders, but it's also bad if you don't manage the risk proper. So I think for 2025, risk management is number one. It's important always, but especially 2025, risk management is super important, because you have so much like events, news, etc. and I would like focus on like one specific asset 2025, an asset where a trader feels comfortable, where he has like some edge over others. I don't know, maybe he works in that industry, or like his I don't know, his father or some parents, let's say, are in the gold business, so you have some knowledge about the gold, or like your somebody works or you work at some, you know, energy company, so you have a better understanding of the energy market and focus there, you know. And always also like try to follow the trend. Key ingredient in becoming successful is to follow the trends. Like you know, are the markets right now, let's say, above 200 moving average, or below? You know, if they're above 200 moving average or 55 moving average that I'm using, is it probably means that markets are going to continue going higher. So that's the third one. Also, I would say is that um, in order to become successful, there is one thing that you need to do is having stop losses. It's like so simple, but it's so often forgotten by so many traders that they trade and they don't limit their losses. And yesterday I was just checking the account statement of one of our most successful traders. I think we paid him out like 30,000 or something just recently. So without an exception, all of the trades that he made had stop loss orders, like without an exception.
Yeah.
Like whether they were big trades, small trades, always have stop losses, and always think as well that the trading is for long term. Like if you want to do gambling, trading is not for you. So successful traders focus more on like staying in the game for longer term, focusing more on the risks, and then if you have a good method, the returns will come automatically. That's like how successful traders operate.
Yeah, no, I agree with you. Like these are the basics, but for some kind of reason, like a lot of traders tend to overlook them. On that note, actually, what's like a very common mistake you notice, like in trader strategies or like their approach to trading overall, whether that's like mindset or actual strategy?
I notice a lot that a key problem a lot of traders are facing is that they try to be smarter, and or they think that they are smarter than the markets, which means that uh, either they are like trading against the trend, or they try to pick the tops and the bottoms. And to be honest, I've been in trading business for like more than 25 years, and I don't know. I know a lot of traders, but I don't know a single trader that is successful in being able to pick the tops and bottoms on the market. It's not statistically possible. And so if one would follow the trend, not go against it, not overtrade, then such person would have solved already like one of the key problems that a lot of other traders are facing when trading the markets.
Yeah, no, I see what you're talking about. So from my side, honestly, I don't really have any questions. You really answered all of my questions already. But like, is there anything you feel like we haven't touched upon that's like important for the new year ahead? We're at a stage where we're not wishing each other Happy New Year anymore. It's about putting in the work and just getting started. So, like, yeah, anything you wanna add or emphasize on?
I would probably just add is that one thing is what I see oftentimes with traders that have passed the challenges. A lot of times they trade really good at throughout the challenges, and then they go actually to the scaling accounts already, and like they trade really good, like month and a half, and then they start failing. So my advice is like to keep the emotions away from the trading, because why this thing happens is that a lot of traders, they go through the challenge, they're really proud of them, and they should be proud of them. They go to the earnings account, they get some first payouts, two payouts, etc. They get also like to become really proud of themselves, and probably somewhat they should be proud, but that should not affect their market. So what oftentimes happens is that after like one or two payouts, a lot of traders, they start thinking that, okay, I'm the best, like I know the markets, like I got already one or two payouts from the trading pit, and like now I know everything, and that's when they start making mistakes.
Yeah.
So always stay humble in trading. Always respect the market. When you have had like a very successful period of time in trading, don't start thinking that you are the best now. Like always stay humble. Like this is the key word in trading. Stay humble. Respect the market.
All right, so I think that's pretty much it from my side. Thank you so much. I promise to keep it short and sweet, and so did I.
Thank you,
It was really
Celine.
a
Really
pleasure
pleasure
talking
having
to
you.
you, and just getting exclusive insights. Maybe one just like a tiny thing to add. What is the trading pit working on? Like any exciting projects for the new year that you could give our audience a small sneak peek, or we want to keep our
Okay.
secrets?
So big thing this year for us and for our clients, our trading community is going to be stocks. So we are working really, really hard to add physical stocks for trading. It's not CFDs on stocks; it's real stocks. We are also very, very soon going to launch one new platform
Okay.
for our FX CFD traders. And also we are looking towards adding cryptocurrencies, so spot cryptocurrencies sometime during the second half of this year. So hopefully, fingers crossed, by the end of this year, we should have like a really multi-asset offering, like futures, FX CFDs, like real stocks, like spot cryptos as well, like a number of platforms, from like MetaTrader, CTrader, Ninja, all of these like cool platforms, so that anybody who wants to like really get access to the markets, really show and benefit from their talent, can come to us and trade anything and anywhere. That's what we want to do in 2020.
Yeah, that sounds really promising and exciting. I can't say I'm not excited. So, just to our audience, keep an eye out on our announcements, I would say. And besides that, I will just, say thank you again. It was really a pleasure. And yeah, looking forward to more fruitful discussions in 2025.
Thank you, Celine. Thank you.
Thank you,
Thank you, all the
Omar.
traders.